Yo, what's good? Back to review another week. Shit. It's currently Monday, brand new week. We're just going into a brand new week, but I thought perfect time to recap last week. Pretty clean week. We shouldn't have really had any losses at all, but unfortunately, on Wednesday I had my stop loss a little bit too tight, stopped me out, and then ran the same direction that I was predicting that it was going to. Three buys on gold: Tuesday, Wednesday, Thursday, and that's it. Obviously, the best buy entries were earlier in the week. On Tuesday, ended up being really good buy entries to hold into pretty much Thursday and in the end of Thursday, but you wanted to take profit just before NFP on Friday because we had a huge dump to end the week. So yeah, I'm going to quickly go through that stuff. I just wanted to tap in face to face and yeah. I'm going to start with Tuesday's trade, go through that, gold buys. All these trades were taken after London session. And yeah, it was a nice week to bounce back after the losses last week. We had 3 losses in a row last week. Technically could have been 3 wins in a row this week, but unfortunately it was only 2. We took a loss, but overall a good week. So guys, just opened a brand new weekly candle. Week commencing the 9th of September. We're about to review the week commencing the 2nd to the 6th of September. So let's get straight into that. First trade. These were the 3 trades that I took this week. Buy on Tuesday, buy on Wednesday, buy on Thursday. Didn't trade Monday or Friday. As you can see right here, took a loss on Wednesday. We took a win Tuesday, loss Wednesday, win Thursday. So 2-1. Let's get through the first trade, right? So on Tuesday, this 3rd of September, we had S&P Global Manufacturing PMI final and also ISM Manufacturing PMI, along with ISM Manufacturing Employment indexes. The main kicker here was the ISM Manufacturing PMI because ISM holds way more weight than S&P reporting, and we've already had S&P last week, I believe. So yeah, the ISM was in focus here, and we actually had it come out just slightly lower than the forecast, and showing signs of increase since the previous, but still below that 50 grade point. It's not very good, and because it's on forecast, doesn't really hold that much weight, or it does show signs of recessionary scares, as bad data is not necessarily good when we've had tight financial conditions for a long time now. So, yeah, that data wasn't very good. We waited until after the data was absorbed, and I decided to take a trade after London session. Now, where's all this stuff right here? Because it's important, right? This is the first week. Gold buys Tuesday, 11 a.m. Eastern, after London close. 24.83 buys, going into the 2500s again. But we didn't quite make it there. Unfortunately, let's replay the trade. The price pushed up, continue pushing up, still bullish over a pretty long period of time. We went into the new daily candle. We were just like slowly edging up. Very very low volume price action here. So because we're like already pretty much like 120 pips up at this point and we're into the next day, I'm already thinking about taking profit early potentially, because even if price does bounce up and hit TP afterwards, we've got to go through all of this drawdown that's coming with the inevitable pullback. Sorry, this is in the way. The inevitable pullback from these highs now, because we prices pushed up for some time. You can see clearly from these bullish huge candles at the beginning, prices went completely small, wicky candles, showing lower momentum and lower volume because we're out of session. But then as soon as the session kicks in again, like a high volume session like London, New York, it's going to come with volume and it's going to go one way, and that's down. So it can collect more buy orders and continue up with the trend. If it's going to do that, it might even break the lows. So it's a huge risk that price might come back to the entry and you've missed out on securing 120 pips. So I'm not gonna lie, I was considering it here. So I think I did secure around 100, 120 to 130 pips because that's kind of where we maxed out was 130 pips if you look here. Oh, actually, it was nearly 140 pips, so you pretty much hit TP at that point. I'm not gonna allow a trade to miss my TP by 10 pips and then take all that profit off me. Like that is just silly. Very silly. So yeah, I secured that up here. Didn't quite hit my 150 pip target, but technically in this instance I could have had my stop loss a lot tighter because we didn't really get challenged for our 50 pip stop loss. So I could have even had it like got away with 30, and then I would have had a much tighter tighter TP to get that 1 to 3. But we did go for the 50 pip stop and 150 pip target. So that's what it was at that current time. And then I decided to consciously close the trade when price was up here. It was struggling to break. Because I didn't really like this at all. This was happening for some time. And this was like off button, even though we had a last boost up before we dunked. This was good. But then price started to show more exhaustion and eventually broke this low here. And that was when it was wraps. It broke this low here. It's over with. Because up until that point, it was not breaking any lows at all. Like really. And then boom, breaks that swing low. It's over with. But yeah, managed to secure well over 100 pips on that trade, those buys. I wanted that to be quick explanation, but I really wanted to go into thorough detail what I was thinking about currently when I was up that many pips and what I decided to do. But yeah, first buys of the week. Let's go into the second trade. So yeah, we had bad jobs data come in on Wednesday. It was after NYSE Open. A bad jobs data. Jobs data is in focus at the moment because of the Fed looking to cut rates very, very soon, and they probably will, but they want to be focused on growth data and jobs data to see if the economy is basically healthy. That's what they want to know, because they've got inflation under control. That was pretty much the only thing because factory orders wasn't that important. Did come out optimistic, but it's not as important as jobs data at the moment because jobs data came surprisingly low. Like that was worse than the minimum, I'm pretty sure. Um, that took charge and obviously supported the gold buys further as we further pricing rate cut bets. So yeah, price was floating around this area, making a minor support level around 24.93s. Um, this was like hours after London session at this point, so I was looking at this like double bottom formation that formed, and the fact that we were holding above here pretty well at this point. And then when price started to shift above these like minor highs here, so when I was like, all right, this looks cool to take some buys back above like 24.96s and beyond into the 2500s again to continue the trend, right? But at this point, I did have only a 30 pip stop loss, which is like 20 pips short of what I would usually have. Just move this a second. But I did take this trade with the same entry as this, with 30 pip risk and 90 pip reward. Unfortunately, we got stopped out because of the tight stop. Price pushed even further just to retest even further, and then it decided to shift, and that's when we got the buys above. one of the other times to speed this up. But yeah, we did end up pushing back above there. And if I had, um, this is what I was talking about previously, but if I had a 50 pip stop in this instance and went in for the 150 pip target, I would have got both. I would have got the 150 pip target and that would have been cleanly out of the way of price pulling back. Ended up holding pretty well above here and took off with volume. I was going to the last trade of the week. This was unfortunately a loss in my case though, because we had that 30 bit stop loss. Got stopped out and the price reversed immediately. But yeah, it is what it is. Still went for 2 for 1, so let's go on to the next win. So getting into the last trade that I took this week, more gold buys. This was probably my favorite gold buys setup. Even though it wasn't the best price this week, the Tuesday trade was technically the best price. We would have had to have a much wider stock to suffer this push down on Wednesday. And thank God I took profit here, but you could have got, I guess, some sick buy entries earlier in the week on Wednesday during early New York session. But unfortunately, I wasn't trading around that time. I looked to take buys here, but we're not talking about that. We're talking about the fact afterwards, the aftermath going into Thursday, when we had some more PMI and jobs data. So I believe everything came out mid pretty much. Like, let's just make this. Other than the ADP came out very surprisingly low. Everything else was like on forecast in the middle, not much change. Um, so yeah, the ADP held the most weight, and it was bad jobs data, which equaled gold bulls, supporting rake up bets, and highlighting that we could highlighting recession scares. Sorry. So yeah, we used that volume and that from that data to capitalize on some buys once we had the pullback. So initially, we had the breakout in the early sessions of Thursday, pushed up all the way to make new highs at 25.20s again. Inevitably, as we're going into a new session, like New York session, where we know there's going to be a ton of volume, and we're sitting at some highs like this, we know that there's going to be a pullback at some point. There has to be like a correction to the initial move, at least 50% of it, or maybe all of it. Who knows? You don't really know how much of the impulsive leg is going to get corrected. You just know that it's inevitably going to happen. So at this point, we weren't looking to buy here, obviously. So we had the results come out. Waited for the dust to settle after NYSE Open. Price dumped after NYSE Open, conveniently, and then by London close, price was like retesting this minor like support level, you could say, at 25.05s. So it just worked out perfectly. Price was rejecting this level, and it also happened to be a higher time frame resistance level altogether. So price just technically broke out, pulled back into this area, and that's where we started to see the shift after the sessions. This is why I like to trade after London close, because it's basically like the end of the sessions in the day. I've got New York session, like the end of the New York session is like the last period of the day, basically. So the dust settles and you have less chance of getting faked out or getting a fake move. That's why like I feel comfortable entering these buys here at this time, because it's highly probable the price is going to continue the trend, uh, especially when we have data to support it. So yeah, it was a nice trade to take. Perfect price action went along with some not so perfect data, but it did it worked out in the end with the surprising outcome of the ADP. Yeah, 150 pips on this trade. Risk 50 got barely any drawdown pretty much. And then after that, we got mixed data on NFP on Friday, so I did not trade that day. although we had a huge sell-off. I chose not to trade that day because we had mixed data. We were very lucky to get like somewhat one-sided data with the surprise outcomes over like the last 3 days. I think we got like three surprise outcomes, or maybe not two surprise outcomes in a row. Sorry, um, which fueled some nice volume to take part in. Yeah, did not trade Friday. Friday dumped below 2500s again, and now we're into a new fresh week where prices rebounded back above the 2500s again. But yeah, that was the end of my recap. 3 trades, 2 wins, 1 loss. Unfortunately, could have been a win had I executed properly. But yeah, man, it is what it is. It's a nice week to have back after the previous week of losses. And it's nice to bounce back like this. It could have been a clean sheet. It could have been like 3 for 3. But it is what it is, man. We all learn. This is more lessons to take in, more knowledge to take in. So